And the Business Daily front page has some bad news. I think when we hear the IMF, we already know that's just, more taxes calling or higher revenue targets, etc., or a loan that you and your children and their children will have to pay for. So Kenya faces more tax pain after the International Monetary Fund, that's the IMF, signaled the need to raise more revenues as a condition for its multi-billion loan facility for the country. The IMF says Kenya underperformed on revenue collections in the year ending June, a period before the withdrawal of the Finance Bill 2024 that has left the Treasury in a bit of a financial strain. It wants Kenya to increase tax collections despite the withdrawal of new taxes in the Finance Bill after deadly youth-led protests. You might ask, say to yourself or say to me, like Mariam, I thought we had this discussion and came to the conclusion that Kenyans don't have, anything to be taxed, anything more than what is already being taken. But this could signal the introduction of new taxes through tax law amendments or aggressive pursuit of tax evaders and cheats and roping in of traders and workers in the informal sector. Now, two of these things strike me as, things that are probably more likely to happen. Tax law amendments, I know we'll probably spend the next year again in court battling punitive taxes. And of course, trying to rope in workers in the informal sector. I know KRA is already tried making basically M-Pesa, statements be used as ETRs, and whenever you pay anywhere with mobile money, whether it be Airtel, M-Pesa, etc., to have those used as ETR receipts. So that is definitely a big move to get tax cheats. But yeah, aggressive pursuit of tax evaders and cheats, that one, I don't know, a bit tricky, of course. The money we lose to corruption would probably be more than enough to finance whatever budget deficits it is we have, and to even get into development spending, not just loan repayments, but we are where we are. In some more interesting news, though, inflation has dropped to a 17-year low on falling food and fuel prices. For example, the price of a kg of sugar is about 150 shillings, and it has been dropping year on year by at least 31%. So inflation fell from 3.6% in September down to a low of 2.7% in October. Numbers not seen in 17 years. That's quite a good drop. But of course, the fact that there's still very little money circulating in the economy for most Kenyans, even with the fall in inflation, and of course with the CBK dropping lending rates, does not point to any real quality of living change for Kenyans. Kat